Thank you all very much for joining us this morning. My name is Steve McMenamin. I'm from the Indian Harbor Group here in town. I'm your host for today's event, which is part of the ongoing series of the Greenwich Roundtable. It gives me great pleasure to welcome back Putnam Lavelle, one of our earliest underwriters. Dan Khoshav and Putnam Lavelle are generously underwriting today's session. We'd also like to thank the Bruce Museum for providing us with an intimate place to gather. Our topic this morning, Russia Now, El Dorado or Fool's Gold, is a continuation of a session we first aired in August of 1998 on the very day that Russia defaulted on its debt. Our speakers that day were speechless. Many of us in the room that day watched in horror as our allocations to Russia either evaporated or ran away to Cyprus. Perhaps today we'll get a progress report and learn why truly it might be different this time. So as usual, I'd like to ask you to fill out the back side of the report card that's on your seat today so that we can do a better job. Today our panelists are three of the very best athletes, all very different from each other in this exciting and dangerous marketplace. At this point, I'd like to introduce them. George Siguler, sitting to my left, is a founding principal of Siguler, Guff & Company. Siguler Guff is a multi-strategy private equity firm with over $2 billion in assets under management and was created in 1995 following a spin-out of the old Mitchell Hutchins. Mr. Siguler has been active in private equity for nearly 30 years. The company has a successful track record, acting both as principal investor in creating and managing private equity partnerships and as an advisor acting on behalf of clients as a limited partner in top-tier funds. Before joining Mitchell Hutchins, Mr. Siguler was president of Associated Capital Investors. George was also a founding partner of the Harvard Management Company in the early 1970s, where he initiated and managed its venture capital buyout and hedge fund activity. Mr. Siguler also served in the Reagan administration as chief of staff of the U.S. Department of Health and Human Services. George has served as a director of the Common Fund Capital and was a member of the Board of Overseers with the Harvard Medical School. Sitting to George's left, Marshall Goldman is professor of Russian economics at Wellesley College. An expert on Russian economy and the economics of high technology, he has been a member of the Wellesley faculty since 1958. He is also associate director of the Davis Center for Russian and Eurasian Studies at Harvard University. An internationally recognized authority on Russian economics, politics, and environmental policy, he is known for his study and analysis of the careers of Mikhail Gorbachev and Boris Yeltsin. Professor Goldman is the author of over a dozen books on several topics of the former Soviet Union, including such titles as The USSR in Crisis, The Failure of an Economic System, Lost Opportunity, Why Economic Reforms in Russia Have Not Worked, and most recently, The Privatization of Russia, Russian Reform Gone Awry. Professor Goldman was present during the August 1991 coup attempt. He has met with Mikhail Gorbachev and former President Bush and continues to meet regularly with business leaders, diplomats, and government officials at the highest levels in both countries. Sitting to Marshall's left, joining us from Moscow, Frank Mosier is the principal manager of the Casimir Partners, a hedge fund dedicated to equity investing in the former Soviet republics. Before founding Casimir, Mr. Mosier was a partner at Renaissance Capital, a leading investment bank in Russia. At Renaissance, he has been directly involved in the Russian capital market since their inception in 1995. At Renaissance Capital, Mr. Mosier played a key role in many of the largest capital market transactions in Russia and was responsible for relationships with several of the largest public market investors. Before that, Mr. Mosier was part of the Russia team at CS First Boston, then widely known as the leading investment bank for that region and a pioneer of the Russian capital markets. At CSFB, Frank was actively involved in many of the first cross-border M&A deals in Russia. Mr. Mosier holds a BA in International Politics and Economics with a minor in Russian from Middlebury College and a diploma from the Pushkin Institute in Moscow. Frank is fluent in Russian, and he has lived in Moscow since 1992. Ryan Dartnell, sitting to my left, is the moderator of the Greenwich Roundtable today and a trustee of our group. He is also the author of our series on the emerging markets. You may remember his dazzling session in China last year with Jim Rogers and that exchange. Ryan is Chief Investment Officer for Granite Associates, where he manages the portfolio for the Geary family. Before Granite, Brian was an emerging markets portfolio manager at GAM. And so without any more noise from me, please welcome Ryan as he sets the table this morning. Ryan?
Thank you very much, Steve. It's nice to be here. Russia is certainly in the news. This is the cover of the Financial Times today. It's Khodorkovsky behind bars on trial yesterday in Moscow. And with the passing of President Reagan, we've obviously all heard about the Berlin Wall coming down in 1989, etc. Steve referred to the panel we had in 1998. Reading the transcript, again, it's clear to see that the people were absolutely shell-shocked. I will say that none of those three managers is in business today, so you should all three take that as a health warning. I think it'll be an interesting panel because each of our speakers comes from a completely different perspective. George has a private equity long-term view. Marshall has a view from the early 1950s when Stalin was still in power and warning the Soviets that the U.S. would wring their necks like a chicken. So clearly he's seen a lot over these last 50-some years. And then Frank, as we've heard, has been a resident of Moscow during most of this very tumultuous time. I thought what I'd do just for a minute was to frame the discussion today. In 1976, when Reagan was in his wilderness period, when Gerald Ford had won the nomination to run for president, Reagan wrote, "The Soviet system is a form of insanity, a temporary aberration which will one day disappear because it is contrary to human nature." Well, he was right, obviously. GDP since that time has collapsed. If you look from 1989 until 1998, the Russian economy basically halved. The ruble, which was 1-to-1 for so long, is now 29-to-1. And, it's a historic meltdown that's hard to imagine here. Obviously, since 1998, it's been a different story. Russia's been on a rising tide of oil prices and natural resources. The reserves at the lows in 1998 were less than $8 billion. Today, they're over $90 billion. As opposed to so many years of shrinkage, we've had 5 years of not over 5% growth, but average of 5%. Last year was 7. This year, in the first quarter, is 8. So clearly a different profile than we saw coming after the collapse of the Berlin Wall. And President Putin, who's now been reelected with a huge majority in March, clearly understands that good politics make for good economics, and has pledged that over the next 10 years he's going to more than or at least double GDP. Let's hope he's right. I just thought it'd be interesting in perspective just to look at the oil market. Russia produced 6 million barrels a day approximately in 1998. Today it's producing 9 million barrels a day. It's 12% of global consumption, global production, and it's only 1% behind Saudi Arabia. So a very large player. So the price of oil and the volume of oil have obviously had their impact. And today Russia's a $1.2 trillion economy on a par with Italy, 145 million people, as opposed to Italy's 58 million after a period of stability. Clearly Russia's in a position, if it's stable, to continue to perform. I think our three speakers will be very able to tell us what their perspectives are. And I think I'll hand it over to George first. George, your weather forecast?
Thank you. It's good to see many new people here, but a lot of old friends as well. I think I look across the room. I guess being in the business for 30 years, you meet people in all kinds of venues and have some fond memories. Lloyd Haskell and I crawled underneath the Wailing Wall one night and had the most memorable night probably of our lives. Served on the Common Fund board and with Don Pascal a number of years. Terry Wolf and I are old friends. But the person sitting left of me really goes back about as far as anyone. When we put together the Harvard Management Company, I had this great idea saying we had a lot of expertise in the faculty, and wouldn't it be fun to go over to the faculty club and buy lunch from these professors and find out what's going on? And clearly the OPEC had just been created, turmoil in the oil sector and such, so we went over and saw A.J. Meyer. But one of the people we sought out was Marshall Goldman, and that was when we first met, and I guess that was around 1974 or 75. It was the good days of Brezhnev and Kosygin and the Cold War, and the the notion that Henry Kissinger let us sleep every night because our foreign policy was based on mutual assured destruction, and that was that was about 30 years ago. About 20 years ago, and it was actually June of '84, I was serving in the Reagan administration and in a relatively senior position. Got a call saying to report to the Pentagon at 6 a.m. the next morning, bring 3 days' worth of clothes. You were going off to an underground site to have an exercise related to the continuity of government after a nuclear exchange. That was an interesting period of my life there. 10 years ago, again, not looking back and not being able to predict things, in June of 1994, I was invited to speak in Volgograd at the Regional Duma building, a building that went back to the Tsarist era. I stood at a lectern where Khrushchev had stood, where the Tsars had stood, where Lenin had stood, and spoke to 300 Red directors who were running enterprises there, saying that I was foolishly going to bring capital to Russia and invest in their businesses. I did that as part of a Russell 2020 trip, and I look back on it, and none of those managers are in place now, and it was quite a change. They had no clue back then that revenue and profit were different words. Had different meanings. They were most of them running failed enterprises, but that's where we were 10 years ago. And now we stand here today. Our firm is the largest private equity manager in Russia. We've had our successes and our failures, but on balance, it's been a positive experience. And I think that we look forward to investing further there for some fairly fundamental reasons. Russia is a country that our assessment of its economic potential from the first time we got there was not Pollyanna. We didn't say that this was going to be China or India, that we didn't see it as a low-cost manufacturer of much of anything else. We didn't see large amounts of technology to transfer. Our fundamental guess was that if Russia kind of worked, you would turn into 5 Canadas. You would export energy, natural gas and oil. You would export minerals and metals. At some point in time, it'll export agriculture. And with that and the wealth associated with that, it will build a society where the service sector and the consumer will catch up for 80 years of pent-up demand with consumer goods, with housing and the like. I grew up in Cleveland in the 50s, which was a pretty miserable place. The river caught on fire. We had big steel mills. We had 3 black and white TV stations and not much else. So the first time I got to Moscow, I said, I can relate to this. But I said, Cleveland changed. And I said, Moscow would change. And we've seen an enormous change. I mean, Moscow is truly today a very, very vibrant European capital city. The wealth and creation there is seen throughout. It is expanding rapidly. And it's also, as we're seeing in much of the emerging world, it's leapfrogging to current technology in almost every aspect. So, there was no retailing to speak of in the Soviet era. Retailing has gone from that to big box. So the first thing you see when you get out of the airport is the big IKEA stores anywhere on the planet. Hypermarkets, the European-style Walmarts are all around the ring road. The notion, the country will be wireless. The idea you couldn't get a telephone line and you'd wait months and months and months and have to bribe to get a fixed line is kind of irrelevant now. There are 32 million cell phones in Russia, up from a couple million 4 or 5 years ago. And we'll see that kind of pervade throughout. We ended up going into Russia kind of by accident. My partner, Drew Guff, spoke the language and was asked when we were part of Payne Weber to go over and see if there's anything to do with the fall of the Soviet Union. Ended up as an advisor to the Yeltsin presidential administration and trying to find ways to bring capital to Russia. Out of that emerged a commitment from the Russians to put some money into a private equity fund. So our first commitment actually came from the Ministry of Finance. With that, we kind of went forum shopping and ended up down in Washington at State and AID and ended up at the Overseas Private Investment Corporation, OPIC. And we were the second fund in history that OPIC created effectively a guarantee structure for. So we were able to go out and raise $155 million, where the downside effectively was over the life of the fund you could do no worse than get your money back, guaranteed by the U.S. government. And the upside is you could make whatever we could earn in Russia trying to put the money to work in private equity. Over the years, we certainly have taken our lumps, but the fund is is near its final maturity now. Its returns have bounced back significantly. The 98 certainly cost us a couple companies, but 98 was not like an Asian crisis or a Latin American crisis. There was little or no corporate debt in the system then. It was an equity economy, and it was a dollarized economy. So as a consequence, we were able to ride through on most of it. The two businesses that were significant we lost, we were owners of the largest poultry and beef importing company at the time, bringing in Western product. And when the currency was devalued by 75%, even though we had dollar receivables, the 7 days credit extension basically wiped us out. And we had this medical supply business with the same kind of problems. On the other hand, our pulp and paper business, where we had ruble costs and dollar revenues, had just the opposite effect. So net, the fund is about a 3x right now. The returns are in the mid-20s. And we found it to be a pretty investable place. An example would be what we did in pulp and paper. We in a group bought 60-car pulp and paper up near the Arctic Circle, paid $75 million for it, partially stock purchase, partially privatization purchase. 12,000 employees. We had chicken farms, we had hotels, we had apartments, we had kindergartens, clinics, and the like. Basically privatized into the hands of the employees all the ancillary businesses to get rid of it. Took the employee count from 12,000 to 5,000. Got an XM loan from the U.S. government to convert one of the 5 paper machines from newsprint to A4 copy paper. There was no copy paper manufacturer of any consequence in Russia. Took EBITDA from about $15 million to $120 million. Hired Morgan Stanley, ran an auction, and sold it for $400 million about 4 years later. Had Storer Enso competing against International Paper. In the end, Anglo-American bought it. We used Western lawyers throughout the process. I mean, it wasn't a Western transaction per se, but it was pretty close. I mean, we installed an SAP system. We brought in and had PwC do the audits, converted to IAS audit standards, and it's been a largely successful enterprise. Probably our most fun investment, certainly the one my son sitting over there appreciates the most, is we founded and owned MTV in Russia. We wanted to own franchises when you could create a franchise for the cost of a transmitter. And again, back to my 3 black and white TV stations in Cleveland, TV we thought was an interesting place to be, although knowing something about the industry, your content cost largely goes up with your revenue line. And since most of the content would have to be purchased, we were looking for fixed-price content cost, and nothing was better for fixed-price content than music television. And so MTV met that criteria. It has performed as we expected. Once you cover your fixed cost, your revenues are a hockey stick. Essentially, your margins are everything except ad sales commissions. It's the fastest-growing MTV in the world. We have 16 owned and operated stations. We have about 75 affiliates. And it's a nicely profitable business. To grow it, we started with a franchise and a license from Viacom, and then they now own a large minority position. Eventually, they'll be our exit. We rolled up 3 cement plants and a distribution company to create the largest cement company in Russia. And again, I think it's a significant enterprise. In emerging markets, cement is a growth stock, and this enterprise that we have about a $40 million effective post-money valuation on should do about $100 million in EBITDA this year. We've changed management twice. We were a large minority shareholder, not a control shareholder, yet we're still able to affect management changes, somewhat contentiously, but we're able to do it, and the company is chugging along. As you look at Russia today, I mean, each of these steps, it was different. There was privatization. There was transactions of deep discount of large capital intensive businesses. Today, we look at the market and say there are just lots and lots of intermediate-sized businesses that don't have access to growth capital. We're buying radio stations this week. We and Warburg Pincus have gone in to roll up radio stations and create the Clear Channel of Russia. I can buy radio stations at 3 times cash flow, up, running profitably. Am I afraid of regulation? I mean, I get relicensed. I mean, I guess they could take my licenses away, but it hasn't been an issue. It hasn't. We live and die by the Foreign Corrupt Practices Act. So, I mean, there's no way we could pay a bribe. We know the Minister of Communication. We know the staff underneath it. We comply with the law, and thus far it's working for us. So we find it an interesting place to be. In '98, we ended up taking over 3 other funds that had gotten in real trouble. The managements had a mess on their hands, and in each case, the limiteds or the controlling shareholders had asked us to step in, and we've worked those portfolios through and created multiple, certainly off the value we brought it in at. It's not without its problems, but I think it's a place where, for our size and scale, we threaten nobody. We're in there, and I think investing and trying to grow the economy. The next fund we're doing is we actually had our first close in April. We've raised about 230 out of the 400 million we expect to raise. We'll continue to invest in a similar way. Our capital is seen as value-added capital. We are access to Western exits, so we like doing strategic things with a Western company in the transaction as well as our own. If a Western company is interested in acquiring a Russian asset, they take some comfort that there was a Western owner there before, that we did bring in. We've used McKinsey, we've used Bain, but we do have PwC that, Debevoise or Baker Botts or Baker McKinsey's done the legal work on it, and it creates a valuation expansion for the owner. To the extent that owners have residual concerns about their shareholder ownership, their ritual privatization, or are worried that the larger, powerful groups would challenge their ownership, they take some comfort in our capital as well, because effectively we're an element of political cover. Our next fund is also backed by OPIC, as well as having a significant 10% investment from the EBRD, European Bank for Reconstruction and Development. We'll have a small piece from the World Bank. So we do bring some political cover to it. And I'm not sure it's necessary, but people feel comfortable about having it. That's where we stand today. I think that we may hear more pessimistic views. Certainly Marshall and I have had this debate in the past at other venues. But we look at private equity quite differently than the public markets, for example. And I think the public markets you'll hear a lot more about, but are basically driven by oil and gas, minerals, and a couple other companies, cellular company or two, and maybe one consumer products company. Doesn't represent the economy. There will be a stock market there that works. We're looking at stock market exits. But for the time being, and maybe for the rest of my life, Russia will be capital starved and kind of good value to grow on. Thank you.
Just before we move on, I'd be curious, how much of the returns that you talked about are what I would term pioneer profits relative to the opportunity today? You're talking about the very cheap radio assets, but can you find lots of investments, or is this going to be an intensive thing? And the Russian huge returns we've seen are something that was there for the pioneer but not for the follow-on investor.
Well, I think, people used to ask us what our ROI criteria was for investing in Russia, and we'd start saying an easy deal ought to be a 5x and a tough deal ought to be a 10x. And I said, I don't know how long it'll take to exit, but that's what we're looking for an upside now. I think it's a little more expensive, maybe even significantly more expensive, but you're buying off of cash flows. You look at a dynamic of something like radio. I've got the number right here. Ad revenues from 2000 to 2004 in Russia went from 760 million to 3.2 billion. So unit cost for advertising is growing at 20% a year. If you can buy a radio station at 3 times cash flow, where top line's growing at 20% a year, and you can leverage it, it doesn't take you long to get to 5x. And that's our dynamic. The kinds of things. Russia has yet to really develop national branded consumer products. Again, look back to the model of the United States in the 50s. So almost any roll-up in a consumer product, we're looking at oilseed crushing and margarine and mayonnaise. In the U.S. it would be a mature business, but it's not going to be promised margin over there. It's not going to be a Unilever product. It's going to be an indigenous product with a Russian label on it. And you can roll up 3 manufacturers and put that strategy in place and execute on it. So it's different, but it's still wide open.
Thank you. So just as a quick introduction with Frank, I was looking at the market and the bonds that Marshall referred to. I was thinking about my personal experience in June of 1998. There was a 30-year bond issued just before the crisis, 12.75% coupon that came at about 89 cents on the dollar, which looked particularly juicy at the time. We didn't buy it, but rapidly plunged to about 30 cents on the dollar, giving it a, north of 50% current yield. The trick was you had to get paid. It then went down to 18 cents on the dollar, 64% current yield. Today, that bond, after having fulfilled all its coupon payments ever since, traded at a high of 160. You made over 9 times your money from the lows on a bond. The Templeton Russia Fund is a quick proxy for the Russian market, is up 5 times despite the falls we've seen. And Wimpelcom, which was referred to, is up 19 times from its lows in 1998. So we've heard from an optimist, a pessimist, and I think now we've got a schizophrenic. Frank, your perspective?
Well, at the outset, let me just tell you that when we talk about UCOS and property rights, it always reminds me of 1996, 1997, when we were spending a lot of time criticizing Khodorkovsky and Lugansk Neftegaz and these guys when they were doing something that was a little bit different and they were perceived a little bit differently in the West. What they were doing is they were stealing the company. And the way they did that, which was very clever, is they would hold an annual general meeting or an extraordinary general meeting. They would close the doors or not tell you where it was or not let you in. They would do a massive dilutive issue. They would buy that dilutive issue themselves through debt of the company itself, which they bought in the broader market very cheaply because they depressed the prices for very obvious reasons. This is how they became the majority shareholders in the company. That's how they consolidated it. We had a different view then about property rights vis-a-vis UCOS. So as some very honorable people, including Marshall Goldman as well as Senator Bob Dole and others, are trying to defend property rights, I would just remind you that there is some history here that tells a slightly different story. And so as we look at UCOS, I would urge you to have a little bit of an open mind. What the government is trying to do, and I think even Marshall would acknowledge this, is probably in the long term a good thing. How the execution is actually handled is a big deal. It ought to be made a big deal. I think that's part of what you're saying, and it's, I think, in the context of the near and medium term, one of the key issues in Russia and in our investment decision as to whether we want to be investing in Russia or not. I came to Russia in 1992, essentially straight out of university. Started working for CS First Boston in corporate finance. Left there with Boris Jordan and about 30 of the front office people to form Renaissance Capital, not affiliated with the one here, but the one in Russia. And there we did many of the first privatization voucher and equity trades, some of the first M&A, cross-border M&A transactions, as well as some of the first, in fact, the first IPO on the New York Stock Exchange, which was Wimpelcom, followed by MTS. And I left there a couple of years ago to start our current business, which is called Casimir Partners. It's essentially a couple of hedge funds that are long-short Russian equities with an absolute return strategy, which essentially means, and I'll talk a little bit more about this, essentially means we're not a country fund, we're not a long-only fund, and we are very cognizant of exactly the kind of volatility that Marshall talked about, which I think is, at least if you're investing in the public markets, the biggest risk that you face and the issue that you need to focus most on in order to enhance your long-term returns. Let me start with a quick story that I think illustrates the fact that Russia has a unique ability to surprise and, in fact, outperform. In 1991, Boris Yeltsin stood on the tanks and saved the country from a relapse of communism. The country ceased to exist shortly thereafter, and Russia was born. In 1992, I showed up, and one of the first things I had to do as an analyst and the first foreigner on the ground at CSFB, analyst in corporate finance, mind you, was take a suitcase with about $1 million, go to some place, which I won't describe to you, and buy $1 million of vouchers, privatization vouchers. This was the beginning of the capital markets. And with these vouchers, you could then bid in auctions and get shares in all the famous companies that we know about. I suspect that some of you may have been indirectly investors at the time, and I may have been carrying around some of your vouchers. They all ended up safe in well, I won't tell you where we kept them. In any event, shortly after vouchers started trading, the first real infrastructure appeared in Russia. It was a depository. So it was a place where I could take my vouchers instead of putting them in the other place, and they would be safe. It was government-sponsored. There were guys with machine guns and whatnot. The only problem was it closed at 6 o'clock, and the exchange closed at 5:15. And given the traffic in Moscow, you couldn't possibly get there on time. So the first time we tried to go there, I had my suitcase of $1 million of vouchers. Boris Jordan's driver was my bodyguard. And we went there, and we managed to get in because we had a bottle of whiskey with us, which we gave to the guard. That got us in the door. And, of course, it's closing time at the depository. So there's a small sort of card table, the size of a small boardroom table, with stacks of these vouchers, which are pieces of paper about that big, piled all over the place. And the people that work there are about a half a dozen girls sitting around this table, and what they're doing is they're counting the vouchers out, sorting them, and they're going to put them in the various safes that are all over the place. This was the depository. Now, bear in mind that in the Soviet days, there were many things that just weren't produced. Certain office supplies just were not produced in the Soviet Union. An example of that is paper clips and rubber bands. You didn't have rubber bands and you didn't have paper clips. They just didn't produce them. They certainly didn't import them. So, how do you bind up the vouchers, put them in the safe? No. It was essentially an assembly line around the table. One girl would count them out, pass them to the next. And on the other end was a girl with a box of condoms. Honest to God. The first girl would take the condoms out of the box, open them up, give them to the next girl. She'd roll them out, pass them to the next girl. With a steak knife, would slice them up. Pass them to the next girl, bind them up, put them in a pile. In the safe they went. I then became the largest importer of rubber bands into Russia. And following that, we had a very good relationship with the depository. That was 1993, the beginning of the capital markets in Russia. Less than 3 years later, Vimpelcom went public on the New York Stock Exchange. Vimpelcom was a company that at that time didn't exist. That, I think, demonstrates to some extent how Russia can surprise and outperform. I lived there then. It was my job, my life. I had no expectations that high. And I think to some extent it has continued to outperform, albeit with the volatility. Let's talk a little bit about the volatility. Before we talk a little bit about the volatility, let me just remind you of a couple of facts that some people alluded to. Russia today, I think Russia today is at a significant inflection point in its political and economic development. And we believe that the ensuing long-term convergence of Russian asset prices to other emerging markets and OECD markets provides an opportunity to achieve returns superior to those in many other markets. And we know historically emerging markets on the cusp of positive political and economic change have been among the most profitable investments in the world. A few facts. 13% flat tax. I was on an airplane the day after Ronald Reagan died with one of Vladimir Putin's chief economic advisors, and I caught him reading the obituary. So we started talking about Ronald Reagan, and I started asking him about how he felt about that. It turns out there are tons of Reaganites. Reaganites How ironic. Advising the current government. Let me remind you, a 13% flat tax. Federal budget surplus of 2.4% of GDP. Real GDP growth, which we've talked about, in excess of 5% since 1999, about 7.5% in 2004. Current account surplus, $11 billion. Gross international reserves approaching $100 billion. So things have very much changed since 1998, and the current situation is extremely benign. And I would argue that aside from, let's say, the growing pains associated with enforcing the law and creating a more law-abiding society and environment, that the current government is probably the most competent and certainly the most competent and reform-minded that we've ever seen, and the potential is extremely significant. To go back to the potential gains, what kind of money can you make from this? Marshall was talking about some of the returns. Let me give you a slightly different bent on that. In 1994, the market appreciated 1,436%. The public equity market, this is the Ross Index, the broader market. From 95 to 97, 823%. From the low in 98 until the end of last month, 1,784%. That sounds great. But what I didn't tell you is what happened in between. What's the volatility? The volatility is, I think, the most significant risk. If you look back to that period, to the beginning of January 1994, which was really when the public markets effectively started to be tracked and traded, until the end of last month, the average annualized return is about 62%. The annualized monthly volatility, however, for that same period is 77%. The people laughing are not invested in a long-only fund, I'm sure. That's not a good trade. I know that's obvious, but one reason that we exist at all is because most of our peers, when I left Renaissance, looking for a place to invest in Russia, most of our peers are still country funds, and they're still essentially long-only, and if, God forbid, you raise more than $300 or $400 million, you become effectively an index fund, and there's not much you can do about it. The largest investment fund in Russia, called Hermitage, has annualized returns of 33% and historical volatility of 48%, and that's only from 96. That, in my view, is not a very good trade. In addition to that, you have periods of very extreme volatility. I won't tell you about the month the market dropped 58%. That was in 1998. But I'll tell you about October 2003 when Khodorkovsky was arrested. 10-day price volatility, 80%. In the first 20 days of October, the RTS index, the broader market, was up 12%. In the last 10 days, it was down 22%. Yukos peak to trough, down 32% that month. Now, that's extreme volatility, but it does happen. A brief commercial announcement. We were up about 6% that month. Yukos subsequently dropped 27% in April and 31% in May. So the volatility is extreme. However, if you can take out the periods of severe negative volatility, my view is, and our experience has been, that you can substantially increase your long-term returns and reduce your long-term volatility. Before I get on to the strategy of how to do that, let me just remind you that one factor that exacerbates this volatility, or in fact to some extent causes it, is the lack of liquidity. The market cap of the RTS index, which is the broader market, is less than $150 billion. That means, I'm told, that you all represent in aggregate about $1 trillion in money. That means that if, for example, we decided today to get an allocation of, say, 15% from each one of you, we could buy the whole thing. Incidentally, I think between George, Marshall, and myself, we could manage that.
But speak for yourselves.
So this low level of liquidity, and to give you an example, Lukoil, one of the largest companies, which has a market cap of about $23 billion, trades on average between $70 and $100 million a day. That's not a lot of liquidity. What's the right strategy for mitigating this volatility? In my view, and again, having traded Russia through 1994 through 1998, and you can imagine the experience in 1998 went a long way to crystallizing everybody's understanding of risk management, certainly including ours. My view is that the long-only strategy of the past, of the sort of dedicated country funds, suffers obviously because of the volatility, because essentially it is an index-driven product. What I think makes much more sense is a more combined strategy that that serves to maximize returns as well as aggressively manage the risk in order to reduce long-term volatility. That comes down to a couple of components. Firstly, a balanced analytical framework that includes both top-down and bottom-up analysis. Sufficient domestic information flow that allows you to have a window into politics, but also know what's going on at the company level in order to anticipate events both at the company level and at the macro level that will then influence your market view. Thirdly, an external view. Unlike many people in Russia, I take the view that you have to know to some extent what's going on in Washington, Buenos Aires, and Beijing in order to manage your Russian portfolio well. And we've certainly experienced periods, 1998 is the glaring example, when things that were happening outside of Russia had an enormous influence on what happened inside of Russia. And finally, the most important point, I think, is you need to have an aggressive trading component, which allows you to manage the risks and reduce the volatility. That means sometimes you have high turnover, it means sometimes you have low turnover, but it boils down to a flexible capital allocation model that allows you the ability to short specific names, the ability to short the broader market, and most importantly, what many managers don't like to do is the ability to be massively overweight cash, particularly in periods of extreme political volatility. We are seeing that today. We've seen it for the last couple of months. We saw it in October and June of last year. And frankly, the people who didn't play, and we didn't, by and large, did not play, fared very well. And the people who felt the need to be long only suffered, well, in this quarter, about a 30% loss. Again, the objective is to reduce the long-term volatility by taking out the volatility in the periods of severe political instability. I believe, in our experience on various prop desks prior to forming this firm and over the last 2 years, is that if you implement that kind of strategy, you can achieve returns in excess of 30% with less than 20% volatility. That, I think, is a better trade than the trades you're seeing in the long-only funds. And I think that's a better way to trade Russia. So, to pay for my breakfast, as it were, what is our near-term view, and how should you trade it? I think the situation in Yukos is likely to deteriorate further. I think there's likely to be increased volatility as the situation comes to a head, as Khodorkovsky and Lebedev are likely convicted, and the tax payments are likely enforced. This may lead to certain large Western minority shareholders reaching a stage of capitulation or near capitulation, and we've seen a little indication of that over the last several trading sessions, with bids going away in Yukos, bids going away in Lukoil, as very nervous, perhaps speculative, perhaps institutional money has started to attempt to reduce Russian risk. I think we're likely to see Yukos go into receivership. That's different from bankruptcy, but it's a step in that direction. I think that is probably the perfect platform for a negotiated settlement because it essentially provides a structure whereby anything can be implemented. I don't think that there's going to be a negotiated settlement prior to that, and I think a negotiated settlement in any event is extremely complicated given that you have to dispossess the Menatep shareholders of their shares, you have to maintain some ongoing concern, and you need to some extent, make Western holders whole in the process, and that is a very difficult recipe. I will say that I think Boris Jordan, whom I know obviously extremely well, and who has put himself forward as a candidate to help negotiate that, is probably in a better position to do that than most of us. But as usual, Boris has taken upon himself a Herculean task. In the medium term, the resolution of the Yukos matter and the resulting policy going forward, I think, is clearly the most important issue from a macro perspective in Russia. And what that means is the issues that I think we need to look for in making investment decisions going forward is, firstly, how is Yukos dealt with? But then, secondly, does the resolution of Yukos lead to further policy changes? In other words, do we see this campaign growing beyond Yukos, and how is it done? My view is that there will continue to be actions against oligarchs and against people in natural resources, but that they will probably be substantially less aggressive. And the reality is, you can't imagine a corporate in Russia today getting a tax bill and saying, you know what, guys, we're not going to pay. I'd rather go to jail. It's not very likely that we'll see that. That means that with the resolution of Yukos, we could see a steep decline in the perceived political instability, and that, in my view, will lead to a very good entry point in this market.
Thank you, Frank. Professor Goldman?
Russia, I would agree. Russia is a land of great opportunity for investors. I was hoping that I would have a table to pass out to you to show the fluctuations that exist, showing the upside and the downside. It's also a land of greater risk. So there's a great opportunity, there's great risk. Enormous fortunes have been made, including some you've just heard about, and then lost, and then made again. And sometimes the loss takes place at a cost of life, a threat of life. Some people operating there have had that happen to them. What I want to talk about is, first of all, the securities market, then the current climate that exists, and then the consequences of ill-defined property rights in Russia, which are still being struggled. Now, you've already got a sense that I'm a bit of a pessimist. I was introduced once at one of these sessions as the Dr. Kevorkian of Russian studies. So, and I think that's basically my function here. Anyway, the securities market. Well, it's enormous volatility. That's what the diagram would show, just their equivalent of the Dow Jones Index, the RTS. If you bought a basket of stocks, mainly energy companies, as you've heard, and stayed in it, you'd be okay, because it started out in 1996 at 100, and even now it's over 500. But the upside and the downside is extreme. 1996, you buy at 100. By October 1997, it had reached 585, so a five-fold increase. If this meeting that you heard about that took place in 1998 had taken place just a few months earlier, everybody here would have been a genius, because they had shown a five-fold increase in their portfolios. By October 5th, 1998, just 2 months after that last session was held, the index had fallen to 39. So from 100 to 585 down to 39. So you wiped out basically everything. More than that, you couldn't find buyers if you wanted to sell. Now, this year, as of April, the index had risen to 785. So, again, you would have looked like a hero. Today, it's down to 533. So already there's been over 32%, a third drop since within the last just 2 months. It's that kind of situation. So the trick is to know when to get in, and the harder trick is to know when to get out, and that shows the geniuses from those who are going to lose their money. Okay, what about the current situation? This leads to concern. Well, just within the last couple of weeks, largely, of course, associated with UCOs, the market has been so distrusted that, again, there's been another sort of crisis. Because it's easy to trigger panic, remembering what happened in 1998. People start rumors and everybody gets skittish and then just disappears, at least from the portfolio section, a portion of the economy. The banking system is bad. It's rife with money laundering. The Republic Bank of New York got caught in this. New York Bank, the Bank of New York got caught in this. Savers were wiped out in 1998. It's not just the investors where the portfolio fell to nothing, but banks simply declared a bank holiday, including Khodorkovsky's bank, the front page of the Financial Times, his Menatep. The Russian depositors were stiff. They ended up with nothing. All their savings were wiped out. Foreign investors or lenders were also wiped out. Credit Suisse First Boston lost over $1 billion, had a write-off over $1 billion. Well, here in Greenwich, long-term capital management also was affected by that. So what's been happening the last couple of weeks? Well, the Russian Central Bank revoked the license of Sud Business Bank just simply because there were about $1 billion worth of transactions that nobody could account for. That set off panic in the interbank rate. Banks failed to make their payments. Another bank collapsed. Credit Trust Bank failed as well. And the interbank rate rose from 2 to 3% to about 30% just overnight. Now, as you've heard, the fiscal situation today is very different from what it was in 1998. The government in 1998 was simply borrowing money to pay the loans that were never going to be repaid because people weren't paying their taxes, including the oligarchs. Today, as you've heard, the reserves of the bank are over $90 billion. In 1998, they were really not even $1 billion. They were just a few in the tens of millions of dollars. But the bank practices are still uncertain. Well, let me now come to the last part, which is the question of property rights. And here's where you're getting the Khodorkovsky situation. You have to understand something about the seamy background of the early 90s, because it's that foundation that's so weak and indeed liable to collapse even now when the fiscal situation is so good. Again, remember that everything until 1987 was owned by the state. That's hard for us to conceive. You've heard some description about people going there, and indeed Moscow has changed, but you have to go back to that early situation. So there was almost no private net worth. Well, what happened? Well, the oligarchs, as they've come to be called, and I can't help commercial, but that's what I talk about in this book. It's not really the privatization of Russia, it's the piratization of Russia, which again reflects what took place. They were able to create banks. With those banks, they kind of created personal ATM machines, as it were. That's basically what the banks did. They didn't lend money to small businesses. They got to the point where the state was not collecting taxes because the oligarchs weren't paying it. So the state had to borrow money. The oligarchs offered to lend them the money through their banks. And as collateral, they took stock in companies which had not yet been privatized, some of the best ones, some of the main oil and gas companies. So they auctioned it off in order to collect revenue for the state, with the collateral being held the banks lent the money. The state did not pay back the loan, so then the banks auctioned off the collateral, which was stock in these companies that were being privatized. And of course, the auctioneer turned out to be the winner of the auction. The auctions were all rigged. And so what you had then was a situation where Khodorkovsky, the Yukos owner, the man in prison, paid about $310 million, which was significant, but for a property that was quickly evaluated at $6-7 billion. Berezovsky, who is now in exile in London, paid $100 million for Sibnet, which was another large oil company that's headed by Abramovich, the man who bought the Chelsea football team in London. That was worth about $3 billion. So $100 million for $3 billion. So you can understand why there's anger within that society. I'm sure all aware of the fact, Forbes had an article about it. There are 36 billionaires now in Russia. There are more in Moscow, 33 in Moscow than there are in New York. I don't know about Greenwich, but anyway, and again, the point is that these were not self-made people. These are people who were basically poor in the mid-'80s and then suddenly have blossomed with this kind of income. So there's clearly an element here, a political element, of we've got to get those guys. I was just in Moscow in April for a meeting that was called by the equivalent of the General Accounting Office, headed now by one of the former prime ministers, who has been tasked by Putin to do something to clean it up, to satisfy this public urge for anger, because, again, there are no Bill Gateses there. These are people who took over basically state assets and claimed them as their own, and that's what made them the billionaires. Until 1998, in any case, there was very little restructuring, very little value added from these people. They just simply took these assets and they made their money when the oil prices rose from $10 a barrel to $30 a barrel. And to do all this, to gather all this property, they had to cut an enormous number of corners. Berezovsky, now the man in exile in London, said no one can operate honestly in Russia, even though the laws at that point were really very loose and have been tightened up some. You just couldn't operate legally. For example, the law, there's a police law which says you must have bars on the window. That's if you're a jewelry store. But the fire laws say there can be no bars on the window if you're a jewelry store. So, the only way you can do this is to bribe somebody or to hire a mafia or somebody on top. And this creates an enormous dilemma. There are some self-made businesses, and even they are now having trouble. It turns out that my book is being translated into Russian, which and will be out in August and September. And the underwriters of the publisher are two oligarchs. I don't think they've read the book, but that's their situation. But they're basically self-made people. They've not taken over assets, raw material assets of the sort. They have been told, they've been so successful, they've been told by the number one leader in their field that if they're wise, they'll stop growing because they're encroaching on this number one leader, and the number one leader is owned by the state. In the meantime, all their assets, their books have been raided, they've been seized, and they're worried. They are worried because they said they could end up like Khodorkovsky, even though they think they've been transparent. Well, maybe they have, maybe they haven't. But so they asked me for my advice. What would I do? Would I put my money into Russia or take it outside the country? Because as they've said, the reason they've grown is they put all their money inside the country and they're worried if they're arrested, they'll end up with nothing. Well, obviously you have to tell them to go outside the country. If they do that, then of course that's going to complicate Putin's effort to double the economy because you want domestic investment as well. Now the property rights situation. Yukos is the best example of what can happen given this faulty foundation. Their bank assets have been seized, their taxes have been seized, their offices are raided all the time, their lawyers' offices are raided, the lawyers' homes are raided, of course all the senior people's homes have been raided. All the senior staff is either in jail or in exile or has been released because they had to pay a couple of $1 million to the state for past claims. And they've frozen their assets, or at least until recently, their assets were frozen in Switzerland as well. They've transferred, and here's where you get the property rights problem, they've transferred the drilling rights that Yukos had to one of their competitors in Yakutia. In the case of another example of the uncertainty of property rights, UES, the main electric generating monopoly, had for a time its biggest hydroelectric facility renationalized. There was complaint, so it's now back in their hands again. Vimpelcom, which is a self-made company, a mobile phone company, had for a while its license transferred to a company owned by the Minister of Communications. Again, that is a rather unseemly thing. ExxonMobil has just had its license to operate in Sakhalin 3 revoked because they were criticized for not putting enough money inside. Other firms have been forced out completely. Sawyer Research from Cleveland lost an asset, a property they had built up in Vladimir, $7 to $8 million. A Canadian firm, Norex, had its property taken over by TNK, Chuman Oil. They valued that at $1.5 billion. Subway Sandwich opened up a franchise in St. Petersburg, a joint venture, as it were. They had it vetted by the local KGB. It turned out, however, that their partner was the local head of the mafia. They were thrown out. Only now, this year, have they been able to get back in, largely through the intervention of George W. Bush. And as far as the television stations go, of course, Berezovsky had his property taken away. Nusinski, who's also in exile, had his NTV network taken away. It's a dicey thing. Many do well, but I want to convey to you the fact that many do poorly too. Let me conclude this. The last time I was at a conference like this, I was one of the sole voices warning that it's not such a sure thing. And, of course, that was just before 1998 as well. But I should also say, in candor, people will call me every once in a while, should they buy, say, Russian bonds. The last time I gave that information, I said no. And, of course, they went ahead and bought anyway. Unfortunately, they did because they tripled their money in a very short period of time. So it's not really a question of timing. Russia has enormous potential. I don't want to deny that. But the Russians have a knack for rescuing defeat from success. And they've done it over and over again. And so the question is, have they learned from their experiences? And then I'll just end with a Russian joke, which I think illustrates this. Two bear hunters decide they want to go out into the wilderness to hunt bears. So they charter this little plane. They fly off into the wilderness, find the landing strip, plane sets down, they go off, they bring back these bears, the pilot try to put on the plane. The pilot says, you can't put these bears on the plane, this is a monoplane, there's just room enough for you two guys. So the first timer says, don't give me that. Remember last year we hired you as well and you said the same thing, so I offer you $1,000 and you let us do it. I'll give you $5,000 this year. Okay, load the bears on the plane. The bears load on the plane takes off, the plane crashes. And the hunter rouses himself and says, where are we? And the pilot says, same place we crashed last year.
Marshall, thank you very much. I guess a follow-on question. I'm hearing from George that the benefits of greenfields investment can be huge. You're talking about the possibility of huge paralysis in some of the issues of some of the asset-rich companies. Do you feel Russia is investable at all?
Yeah, it is. I mean, the question is to know when to get in and when to get out. And also you have to be very sure that you know who your partners are. The problem is that they are trying each time to make the laws more and more durable to kind of correct the mistakes. But these things still creep in. Sawyer Research is out there in Vladimir. This was, again, a situation. They took over a laser factory that had been making stuff for Star Wars in the Soviet period. They came in. It was bankrupt. They rehabilitated it. They brought in new equipment. They began to export again. And as soon as it was viable, the local governor took it over. The U.S. ambassador has been out there to try to intervene, exactly with no effect. So there are possibilities. You do have enormous talent. You have enormous human capital. The Russians, have software. Boeing has an operation out there where they've hired now maybe 500 engineers to do things. So you're beginning to get this kind of thing. But it's the Yukos situation is problematic. We just don't know where it's going to end. There are some who say that Yukos is the end of the road. That's all there's going to be, and I don't accept that. I certainly didn't get that feeling in April when we were talking with the people at the General Accounting Office, or their accounting chamber, as they call it, their audit chamber. It's tricky.
Thank you. Before we open the questions, I just wanted to see if any of the panelists had questions for each other or comments.
There's not a barrel of free market oil on this planet, in the United States or anywhere else, the extraction of natural resources is always a joint venture between the state and some extractor, maybe nationalized, maybe independent, whether it's an overriding royalty or a tax rate or the like. We lived in a country that for 70 years decided natural gas had to be a regulated price, and Russia's going through that now. So I think when we look at the oil sector, and we look at anywhere, I mean, would you buy oil in Indonesia? Would you buy oil in Nigeria? Would you buy, those kinds of assets? When you look at the RTS, I'm not sure what percentage is energy, but it's 75+% in energy. And that's the volatility we're talking about. So it was a combination of political volatility, but also $12 barrel or $15 barrel oil versus $40 barrel oil. But not to sort of criticize the public market, but the effective float of the Russian stock market's about the size of Yahoo. And so when you look at it and go through, what do you expect? I mean, you're in one industry with huge price volatility and not the most politically stable place in the world with very thin liquidity. And there's some genuine experts, and one certainly sitting here and trading in the market, but if I see another 28-year-old hedge fund operator who's an expert in Russian stocks, just before his fund shuts its doors, that's where that liquidity is and that's where the activity is. And it has very little to do with fundamental investing in Russia as we think about a growing and capital-starved economy. What's going on in that sector is a political fight. I probably know Michael Khodorkovsky as well as anybody in the room. I was with him on the 4th of July last year, 2 days after Lebedeva got arrested. I was supposed to be with him on the day he got arrested with the RAND group there. I did a panel with him a year before. He's a perfectly delightful guy. But the history is absolutely true. I mean, how he gathered those assets and how the other oligarchs gathered those assets were certainly subject to long-term challenge. But the one step he went one step further. I mean, he not only, was espousing liberal democracy. I mean, he basically said, I'll run my oil company for 2 or 3 years, and then I intend to be the leader of this country. And I want to go from a presidential administration to a parliamentary government. And by the way, President, I'll say to you publicly, I can stop today any bill you want to get through the Duma. Now, if Bill Gates got up and said, President Bush, I can stop Congress from doing absolutely anything you want it to do, we'd have a constitutional crisis in the United States as well, if that could in fact be done. And that's what the structure was. In Russia, there's very little sympathy for where Khodorkovsky is now. In fact, there's a lot of public support. Khodorkovsky was a master at many things. I mean, he bought and owned and was the largest client, Baker Botts, Aiken Gump, you go down the list in Washington, Arnold and Porter. He spent fortunes at APCO Worldwide. He and Don Evans were best friends because U.S. foreign policy said, let's get independent of Mideastern oil, and here's the poster boy of the person who could deliver this stuff. And he got very, very, much involved, thinking that he was beyond being touched, and saw himself as an independent power base. There was no vote in the Duma you couldn't have for $5,000. Sometimes you could buy both sides, $5,000, get a yes or no, and decide that day which way you wanted to vote. But in fact, that was the circumstances under which this happened. He could have cut a deal after Lebedeva got arrested. He chose not to. And so he's on the front page of the Financial Times today. It's not good to have a society of 150 million people where 5 or 6 people control that much wealth. Something will come to it. So, I'm not I don't like the Russian stock market because I find it very under-diversified and in a very much politically sensitive sector. On the other hand, it has very little to do with the fundamental growth of an economy of 140 million fairly well-educated people who have wants and needs and a huge capitalistic spirit.
I would agree with what George said. But I think it goes beyond just the stock market. I think this is the problem. There is a political battle going on. I mean, I forgot which of the two of you described the economists around, the economic advisors around Putin as Reaganites. Maybe it was you, Frank. Absolutely, that's the case. The problem is that on the other side, the political advisors are Leninists. And so you've got this, this incredible kind of situation. And so it's the bureaucracy that's there that goes all the way back to the Tsarist time. And I see it really a decline in political stability. This is what worries me. And the former KGB people who've been brought in by Putin, who are constitute a portion of his advisors, want to take over some of these companies and really want to run them as state entities or want to be owners themselves. Why should people like Khodorkovsky's ne'er-do-wells, as it were, before the ownership of private property could take place, why should they be billionaires overnight within a 15-year, 10-year period? We should be there too. And so you've got some state companies. The property that was taken away from Yukos was turned over to another Siguler, which still has very close ties to the government. That's what you have to worry about.
I just make one point to George. We used to have a private equity fund at Renaissance, about $800 million, called Sputnik. So we have a little bit of experience in private equity, and I'll tell you that I'm interested in absolute returns. That's what we tend to focus on. And if we can produce, which we've been doing at least for a couple of years now, 60% returns with 20% volatility, given the returns in private equity, the duration in which you have to hold on, and I can tell you that's not easy, and I very much respect George for being able to do it. But with the kind of duration and volatility you have to endure, including a 1998 every once in a while, risk adjusted, I don't think that's a very good trade. At least not a better trade.
Gloves are off. Okay, I think we should open up to questions from the audience.
To me, the argument isn't so much about whether the private equity markets, the public equity markets, are the markets to play. Both of them have opportunities. It seems to me that the real question is, you've got a society which is in rapid transition, with a very confusing set sort of legal structure, where it's not absolutely clear that you have ownership. And it seems, from some of the examples, that it's within some government officials' power to take assets for themselves, for the state, without any control. If that's true, does it really matter whether you're in a private company where it happens to you, or whether you're in a public company where it happens to you? It's going to happen. That seems to me the issue from a foreign investor's perspective.
I'm not sure there are many examples of where assets have been taken away from foreign investors without some degree of due process.
Well, Marshall's just given 5 examples.
I have a list in the last chapter of the book of about 20 examples.
I'm not sure I would classify Yukos as an example of that.
No,
I'm not sure about Yukos, but what about this Blazer company?
Sawyer Research. See, the other problem, if I may just...
I don't know the facts.
Yeah, for me, that's one of the issues. And, of course, Frank is absolutely right. Yukos is not a regional thing, although some of the governors in the local areas are encroaching on some of the property. The problem is if you focus at the national level on people like Yukos, that signals to the local governors we can get frisky. And that's below the radar screen in many cases. And so that's the thing you worry about. Even a company like Wimble Dam, which is a food company, which is, again, kind of a startup and really a positive thing, self-made, they are intimidated now by government officials who say, we want a share of this, or you've got to pay us off. That's what you have to worry about. That's below the radar screen. And that's what, from my point of view, that's what makes this George's work very difficult.
But you have to distinguish here between a federal policy or something that is federally sponsored, which is not the case, and specific situations, particularly in the regions. Because let me tell you, you really need to see both sides of the story to take a view on that. I really think if you look back, there are virtually no instances where property rights have really been violated for outside of a couple instances where probably in the regions there was some very corrupt dealings going on. But George would be better to speak to this because he's had direct experience in that.
Yeah, and I've talked to the people at Sawyer, but I don't know the situation well. But we live and die by the Foreign Corrupt Practices Act. I mean, I'm a registered investment advisor. I would be out of business in a minute. We use Western counsel. Most of the counterparties are also Western counsel. We have Russian commercial code, but we also have fairly encumbering shareholder agreements. And as I say, we've enforced shareholder agreements, even in contentious situations and ousted managements and the like. I got to say that, due diligence is different in Russia. I mean, you need to know how people got to where they were. You have to size up partners. It's transparent in different ways. You can find out everything you want to know about somebody one way or another. I mean, the country watched each other. I mean, literally, I can find out the size of Swiss bank accounts of almost any Russian for $50. And you want to know, how people are behaving. You have a lot of time to do due diligence. You don't have to pull the trigger. It's not an auction where you're going to go buy out with a fully funded deal and you end up with the company. So you can spend some time doing it. We have 30 people on the ground in Russia. They're all Russians. All the professionals have Western MBAs. I think it's a skill set. They grew up in Soviet times for the most part. The head of our Moscow office has a unique background. Worked in the gas ministry, was Chernomyrdin's chief of staff, and then was in the first class of Russians to get an MBA from Harvard, and the first Russian partner at Price Waterhouse. U.S. citizen, but living in Moscow. A unique set of skills. But we think we can get to the bottom of most situations, and we certainly walk away from things where we don't like the people or the structure. We're in a legal battle now with the city of Moscow, where we have hold a piece of land in one of the funds that got in trouble that we took over, sitting right on the Moscow River in an absolute A1 location, kitty corner looking at the Kremlin. City of Moscow wants to take it back. We have no money to develop it right now. No money to develop it. We have no money to develop it. We should, by law, be developing it. We've fought them through 4 levels of appeal, and we're still in control.
So your experience, to summarize all of that, is that in fact there are laws there that they are relatively clear and that you can protect your rights.
The higher. I mean, there are appeal processes. The higher you go in the appeal process, the better the law gets. One of the when we had a very successful paper company, when we were ready to sell it, one of the oligarchs wanted to challenge the privatization we bought it under. We went to court. We won. We also kind of indicated this deal was going forward. It would be a really bad transaction for him to try and get on the wrong side of. That the consequences to him, publicity-wise, government-wise, and such, probably wouldn't be a good idea. So I mean, you have a certain amount of pushback as well. I think the experience is Russians are prepared to fight with Russians more than they're prepared to fight with foreigners because there's an element of unknown here, and that works to our advantage.
Hunt.
Okay. I understand the issue of vagaries over property rights, but I'd like to ask a question on a more granular level. In 1996, I know internal State Department documents estimated that Russian organized crime had penetrated 88% of all businesses in Russia. Now, this isn't about property rights. This is about criminal penetration of operating businesses in Russia, and I saw the document. Now, given that the head of the country is the former head of the KGB, I'm curious as to whether you guys have any knowledge as to what that official penetration level stands at today, and what the implication for Russian businesses that you invest in of criminal penetration of the businesses you're buying are.
What do you mean by organized crime?
This is what the document said.
Disorganized crime.
Russian crime families have penetrated, it just says everything from the codes of contact. You can never have served in an army, so on and so forth. And they penetrated 88% of the country. And, do you doubt that?
Oh, let me try. I don't. The reason Frank asked organized crime, it's not quite like the mafia in this country. I mean, in this country, presumably there are structures that report to other structures as a vertical organization. In Russia, it really was never quite like that. As the cynic in the group of us here, let me say that it's not as bad today as it used to be. Now, in fact, the bigger problem, I think, is the government bureaucracy. And indeed, some of the people I know say they would welcome the private mafia because their tastes are limited, whereas the government tastes are much broader. It's still a problem with some respect. I mean, again, the example of Subway sandwich in St. Petersburg was one illustration of that. But I don't think it's as bad as it used to be. Yet it's still a factor, and if you're a Russian dealing business. You still have a risk. St. Petersburg, there have been a series of assassinations of businessmen. Not so much in Moscow, but still occasionally it happens. So it's a problem. Let me just say one other thing, if I may, before it's too late. I didn't give other examples of people who have been successful, like Gillette, McDonald's, Procter & Gamble. I know the Gillette thing quite well, and they call it the Gillette miracle. And the reason that they have been successful and have not had to deal with the mafia, for example, is that their partner was a person very high in the hierarchy, the military-industrial complex. Their joint, and so he kind of protected them. In the case of McDonald's, it was something similar. Their joint venture partner was the mayor of Moscow. So again, the Russians called it a krisha. You had a very high roof over your head, a very high protector. So it's not so much that you violate the Anti-Corrupt Practices Act, but it's a question of how you get in there. You can hire consultants that turn out to be strange people sometimes. So there are various ways of doing it, but you just have to be very careful.
At the back.
Speaking to the volatility of the Russian market, maybe Frank, you can comment on this. First of all, Putin announced this morning in a speech in Tashkent that the government won't bankrupt because and the stock's limit up 25% right now. So it's I think it tells you, obviously you discussed some of the issues of volatility and how to pick your timing, and obviously timing is a pretty key element here. So, discussing Putin and putting it almost in a trader's mentality, the Putin trade for the last 4.5 years has been a very consistent one. And if you bet on him in the markets, more or less, if your timing was right and if your strategy was right, you did fine. We're now in a place where the macro environment is so incredible, and Russia is repositioned not only economically but geopolitically through energy, through global terrorism support. Where do you get concerned, and where can you actually try to value? But then this certainly goes to George and Marshall. I'm sure if you comment on it too. Where can you try to do either scenario analysis or boil that down to valuation analysis? Where a lot of this comes from Russia's, not only is it Putin's word, but where can Russia afford now to be insular and almost, with the momentum that we have right now, can Russia actually, maybe they will bankrupt Ukraine. Maybe they will make some more glaring property rights transactions, especially with a global major like an Exxon, which would probably be the kiss of death, not necessarily Yukos. I guess the question is, where can you, look at Putin and try to make those decisions? Because this point to date, it's been very positive despite all the noise. The government doesn't speak with a homogeneous voice. So I guess it's a couple of questions. How do you value that?
Tim, let's keep it to one, okay?
Yeah. Do you think that Putin and Russia can turn insular and not approach the West, despite what Putin said over the last few years?
Let's, George, if you don't mind, let's answer quickly because we're timing out and I want to get one more in.
Their policy is to get in WTO as fast as possible, and you can't be in WTO and be insular. It may not be in their commercial interest to do that short term. I mean, protected industries and such are growing there, and protectionism has kind of helped it since '98. But that's the direction they're going to. I don't know how you do turn insular, and I don't really see any signs of it.
Okay. I haven't been fair to the left. Any on the left? Go ahead.
Frank, you had said that to control volatility, it's important to be an aggressive trader. And we've also heard that liquidity conditions are quite poor. So how do you sort of resolve aggressive trading? What are stock market conditions like for shorting? How do you actually employ that strategy?
Maybe aggressive isn't the right word. I prefer to call it an active trading strategy. Shorting is very easy. Borrow is free now, and you can get it in all the big names. Most people don't realize that. You can even buy options, calls, and occasionally puts, albeit not with a lot of liquidity. So it's not difficult now to take a short position.
Okay. I think that's it. Thank you very much, all three of you. I'm going to hand back to Steve.
Thanks, Ryan. Just a few quick housekeeping items. There'll be a board meeting in this room right after we finish here. On July 15th, Peter Lawrence has put together a dazzling section for us on healthcare. Again, I talk about this 1 or 2 degrees of separation. I want to thank our talent scout today, Ryan Dartnell, for going from a list of 25 best athletes to the 3 you see here today. I want to thank Gary Wendt, Johan Kamm, and Hunt Taylor for the people you see on the panel. And, we go to these topics very often, and they, in some cases, have no commercial interest whatsoever for our underwriters. Last year, we saw Putnam Lavelle and Dan Kachev step up to the plate and sponsor our session on China with Jim Rogers and our friends from Goldman Sachs and Richard Chevenik's Trench. And this year, they've done a session on Russia. Putnam Lavelle has no Russia practice whatsoever. Dan leads the alternative investment practice at Putnam Lavelle. And Dan, is there anything you'd like to say to the group, and what are you up to nowadays?
Dobre utro. I want to again thank the panel for joining us here today and giving us their views on the Russian market. I am reminded of my first days at Payne Weber in 1985. Having rotated through the mortgage-backed security areas, I joined investment banking and used to coming in at 7 o'clock in the morning, found the floor deserted. Walking to the back of the M&A department, I find an office where Drew Goff, George's partner, was sitting with his shoes off, and it certainly, you could feel that. And he was just completing his second all-nighter, working on a project, waiting for his LBO model to finish computing for the last 15 minutes and putting together papers to send it into the central word processing area for corrections. Those were the days. Drew, at the time, as he is today, is a brilliant, smart guy that combined that with very hard work to achieve results. And that, I think, comes today to say what we are all about and what this industry is all about. We are in, and whenever we need to be reminded, we remind ourselves of situations like that. We are in the most exciting, fast-moving, interesting industry we could ever be in financial services, and specifically in the alternative space where we are seeing and attracting the best of talent. And for that, we have to be every day thankful and feel fortunate. In a speech that Don Putnam, our CEO, gave at the MFA 2 days ago in New York, he obviously updated our predictions on the growth of the industry. He updated predictions on the growth of the institutionalization of the industry. Institutions are increasing their participation in this industry as a result of their own needs and their needs to satisfy their demand of their high net worth client base. Accordingly, he predicted a huge amount of increase in M&A activity as these institutions build up their capabilities to serve and to participate in this market. He predicted, as it was quoted, and I'm not sure, I'll quote it secondhand. He predicted that about half of the hedge funds larger than $500 million will be bought up by institutions in the next 2 to 3 years. Obviously, he's an M&A banker. He has a reason to make predictions like that. But I think the indication that he was making there is that this industry is on the cusp, as we've all been seeing it, of huge growth, huge institutionalization, and we as a firm want to be involved in it in as many ways we can, as an M&A banker, as a strategic investor in service providers that contribute to the ability of this industry to grow to what it can be, and hopefully in a modest way in supporting managers, high talent managers for whom we can build institutional quality infrastructures. We're proud to be part of this organization, the Greenwich Roundtable, and be here this morning and supporting this forum, which again talks us about industries and countries that are going through its early stages of huge growth, as the industry we are in, and I look forward to many more of these sessions and coming here and joining with this great team. Thanks.
I'll just say thank you, everyone. And this is a risk-taking business, as we've heard today. Fellas, good job. Thank you for coming.